Welcome to the Bulletproof Cash Flow Podcast, the go-to place to gain financial freedom through real estate investing. Here we interview investors, mentors, and entrepreneurs who share their secrets and advice to help you build passive income. Let's get into the show.
Hey everyone, it's Augustino. When starting from scratch as a real estate entrepreneur, it takes a high degree of grit and persistence. This is because you're making the sacrifices early on for a better life down the road. Today's guest is truly an inspiration to that previous statement. He went from a stockbroker to now running over $300 million worth of real estate that he built over the past 9 years since he and his partners created CapEx Ventures. So now they take down monster deals. So aside from the real estate investing business, he created and sold off a successful materials company that imported materials from China. And today he's an angel investor and focuses primarily on humanitarian work. He credits his success to building a team of advisors and mentors while working hard on execution. With all that, I'd like to welcome Will Crozier to the show. Hey, Will, thanks for coming on. Appreciate it.
Augustino, super happy to be on the show. Thanks for the invitation.
So before we go on, if you like what Will has to say, you can check out the company website at angelcapitalist.com or just reach out to him on Facebook. He's very active on there. Okay, well, maybe go ahead and tell the listeners about how you got your start in real estate.
You mentioned stockbroker. It goes back a little bit further than that. I actually used to flip cars when I was trying to pay my way through college. I didn't have any money, so I used to go buy old muscle cars and fix them up and ship them to the Northeast where they were, all rusted out and everything. So that's actually how I kind of got started, kind of hustling, the side hustle thing. And I realized I was making more money doing that than I was whatever I was going to graduate in, some engineering program or whatever. I was in Southern California at the time and looking for opportunities to scale up and to add a zero is a thing that I used to always say and still do say. So I said, how do I add a zero to these cars? And I realized everyone seemed to be messing around with these houses, picking up these dirty old houses. And so I was like, heck, I can do that too. So moved over to flipping houses instead of cars for a while. And I did that up until about 2006 when it looked like that market was going to implode there in Southern California. So at that point, sold off anything that I had left in inventory, and I moved to Texas at that point, trying to look for better opportunities. And that's where I was doing stockbroker work, and also I kind of launched my multifamily career. Kind of funny story. It would take about 10 houses in Texas to equal the same transactional price as one house in California. And I'm like, wow, this has got a lot harder. It's like full sprint on a treadmill. So I needed a way to add another zero again. So that's kind of what led me into the apartment arena, and basically fix and flip apartments is what I started out doing in the multifamily.
So now you said back in 2006, this is before the actual bust happened in 2008. So you saw it coming out there in California?
If you just had your eyes open, it was easy to see. One of my final houses I sold, it's kind of a funny story, but the house I sold, it was on a 40-year AM. It was interest only for 3 years and balloon in 3 years. It was just this horrible, and it was a stated income. And I looked at the application to the loan, and there was like 7 people on the app. And I'm like, this is just absurd. I'm done.
Yeah.
I'm out. That was the writing on the wall for me.
No, I saw the same thing back then too. And when I was living in Virginia at the time, I mean, interest only loans on a single family house, like just same sort of thing, same sort of structure. It made no sense to me at all. And I knew that something was going to happen. I knew it was going to be bad. I didn't know it was going to be that bad. It was just nuts. I mean, it still is bad out there though in California. I mean, that's why you find the opportunity down in Texas, right?
Oh, yeah. I mean, I did a lot of research and looked around the whole country. I knew I needed to move where there was going to be opportunity immediately. I didn't want to just sit and twiddle my thumbs for 10 years for the market to reset or whatever. So I looked around, and I looked around everywhere, the Vegas, the Phoenix, the Floridas, all over Texas, and finally just settled on DFW because it just felt, all the data that I was looking at felt like jobs were strong, cost of living was low. It was a progressing state. The economy was going to catch fire. And whether I was lucky or super genius, I don't know, but it ended up happening, and I'm super glad that I ended up in DFW.
That's very interesting because there's people that I talk to that live out of the state, and I often tell them it's like they want to get into real estate, but they're in New York City. I'm like, you got to move. That's the only way. It's just get out of there. It's interesting though. How did you pick Texas? I mean, Texas was the right place, right? Looking back, we know that it was the right place to be. How'd you come across that one? Like, how did you know?
If I boil it down, there was a lot of reasons, but probably the driving factor for me was simply cost of living versus potential income or opportunity for business. So I knew I wasn't going to hit the ground running when I went to Texas with a new business that takes, years essentially to get it just right. So I knew I needed a job, and I was looking at what I could make as a stockbroker out there, as I'd been trained in that. And I looked and I'm like, well, I'm not making as much as I would in California, but really it's a 20% less figure or a 30% less figure. And yet the cost of living is something like 3 to 4 times cheaper. So those ratios just were exploding in my head. And even non-professional jobs, you were still at the time, to me, it seemed like a big deal. You could still make $15 an hour in blue collar or $18 an hour in blue collar. And yet you could buy a house for $100,000. California, they were $600,000-$700,000 for a comparable place. And yet the wages were barely higher. And then the cost of living of fuel and electricity and taxes and on and on and on. It just made no sense. And it became obvious to me.
Yes, it's kind of like the same thing here in Ohio too. It's the cost of living here is far less than it is in most places, and there's still a lot of value. So same sort of deal. Yeah, totally get it. Now, how did that mindset from back then? I mean, it still impacts you today. I mean, I'm assuming you've actually probably even doubled down on that. You added a zero to your mindset, and now you're doing a lot more things today than what you did back then, right?
Oh yeah, trying to scale up every way I can, leverage people, leverage network, just grow horizontally and vertically is what I'm doing now.
Yeah. But I can imagine the big part of building this business that you're doing even today, of everything you're doing, aside from the business side, the humanitarian work it's all about building a business about sacrifice. Maybe tell me a little bit about the earlier days and some of the sacrifices you had to make to get to where you are now in the beautiful Philippines. I can see in the background there. That's just amazing.
I'm squirmish about the word sacrifice because it was all just the necessity to get on the right path. But I understand what you're saying. For me, I mean, I literally loaded up my 91 Buick Park Avenue with every piece of junk, 200 something thousand miles on it. I was in California, just loaded it full. Didn't have a job in Texas, didn't have any connections in Texas, didn't have a place lined up in Texas. So I just loaded it full of stuff. The suspension was sagging, and I drove out to DFW, to North Richland Hills there, dumped all my stuff in a storage facility near Roof Snow in 820. They wouldn't even rent me the storage facility at like $30 a month or whatever. They're like, you have no income. And I'm like, come on, please do it. They said no. So I just charged the whole like 6-month lease or whatever on my credit card. So it was paid in full, and so I stayed in a Motel 6 for weeks, trying to find a place that would accept me. Because again, I didn't have a job, had no proof of employment. So I finally found a studio, 6-month lease on a studio. It was like $370 a month. It was okay. It wasn't in the nicest place in town, but these are, for me, it was part of the journey, part of the experience, something that I didn't feel was a sacrifice. To me, it felt like this is just what I'm going to do.
Yes.
But for a lot of other people, that's an impossible thing to think about. People play like Robert Kiyosaki's cash flow quadrant or whatever it's called, the cash flow game. And you learn really quick, it's a lot easier for the janitor to escape the rat race than the doctor to escape the rat race. And that was where I was. I was fine staying in Motel 6 and this terrible studio apartment. But there's a lot of people who aren't going to leave their whole life behind in California and all their family and all their friends and drive to a place with all these unknowns and live in basically poverty for a long time just to have the right puzzle pieces on the table, the right situation, the right circumstances, basically gathering the dry wood, the kindling to get that spark and let it go, let it grow.
Yeah. And I think that's probably the biggest hurdle for some people anyway, is that they want to realize the wealthy life, but it does take some of that tightening of the belt, so to speak, to really get there, and they still want to drive around with their beautiful cars and big houses, but it's not sustainable. You still have to work.
It's not at all. So what? I started my multifamily firm. That didn't mean I was getting paid. I didn't get paid basically on anything on my first deal besides what I personally invested in. I didn't make any monies on my investors. And then it comes time for my second deal. And yes, there was a little bit, but I had partners. So the little bit of asset management fee or property management fee we're taking, I was netting like $1,600 a month even though we're managing millions and millions of dollars in real estate. And then I'm 1031 exchanging all my gains. So it's like I'm still extremely poor, even though I'm like a millionaire to multimillionaire on paper. It's just this
Yes.
weird, trippy thing. So I'm moving into our terrible ghetto, rundown DC properties, and I'm living in one of the units, just watching it every day, all night. I've got my concealed handgun license, and I'm just put all my eggs in the basket and really freaking watch that basket.
Yeah. Well, it's funny because I heard one of your other interviews, and it's exactly what I wrote down here. You put all your eggs in one basket and you watch the basket. And I mean, you just win it all in on one thing, and it's funny because I talk about that. And even in my live events, I say, guys, you just got to focus. You can't do real estate and do wholesaling, for instance, and then start doing flipping and then start doing selling stuff on eBay. I mean, guys, focus, one thing.
I completely agree.
Yeah. Now, can you tell us a little bit about maybe one of the more recent deals that you just did? Like, how'd you put it together? How'd you structure it? How'd you find it?
Sure. A recent deal is Sedona Apartments in Abilene, Texas, not Kansas. Why Abilene? Well, the market's pretty dang hot in DFW. Comparable product in DFW is probably about 80, 90K a door. Out in Abilene, we got it for the low 30s a door.
Wow.
It had already received a lot of rehab at that point. But it's 500 units, heavily distressed. Basically, when we took over, it was 50% occupied. The half that was not occupied, half of those units were hard down. I mean, no sheetrocks, no plumbing, burnt out units. I mean, it was a mess. We're deep into that project now, riding the ship, seasoning it out a little bit, just filling up the last bit of occupancy. But how did we structure it? How did we take it down? Me and my partner, Jason Sharp, CapEx Ventures, we're syndicators. So we syndicated that deal because it was so distressed. Lending on it was not as ideal. You didn't get quite as much leverage as you typically would get, especially if you were in a larger city. So I think our LTV, maybe 65%, something like that. So it required a big equity raise. So syndicated with a lot of folks, have some good guarantors, key principals to sign along with us. Talking about sacrifice that we've been talking about, we signed a full recourse loan on that thing. I thought I was done doing full recourse, but it was severely distressed. So me and my partner said, we believe in this deal. We know it will be huge. So we signed it. It was full recourse, meaning for anybody listening, if it didn't go well, the bank, we're the first stop. Who they're going to come and look at. They're going to look at our stock portfolios, our real estate holdings, anything that we've got that they can grab, they come after us. So it's a little bit like gulp. Okay, I'm setting my life on this. All my everything I've done up to this point, they're going to come in and get it if things don't go right. So it displayed that we had a lot of confidence in the deal, and that got the bank comfortable, and it got our investors comfortable. And it's going really well. It's going to be a fantastic deal, but it's a lot of work. It's not easy. It's not glamorous. It's not get rich quick, but you can make a heck of a lot of money if you employ the right systems and you have the right team in place.
That's right. And you also get to use some of those materials from China as well, some from your old business, right?
Oh, yeah. That business has been huge cost savings for us. And not just cost savings, but even logistics. When you're doing hundreds or thousands of units in a year, you're renovating all of these. You need a supply chain of consistent product, not changing the colors of the flooring or the fans or the lights or the faucets. You want a consistent product, a consistent quality, a consistent price. The competitors that we were buying for previously, one day it's a great price and the next day it's a terrible price, and then it's the wrong material and they can't get it to you fast enough, and you've got labor guys standing around with their hands in their pocket and you're still paying their hourly wage. So we basically had to do that business to get done what we need to get done on these projects.
Wow, nice. Did you ever have run into a challenging situation, and how'd you get out of it?
Have I ever gotten into a challenging situation? Yeah, a few of those along the way.
Pick your top three then, I guess.
Early on, I think it's easy to pick on early on because you're so impressionable at that time. A little later, you have more resources and you're a little more jaded. And so you hit these things and you just kind of like, whatever, it's happening again. But early on in the career, it really brands into your mind, what is going on, what's happening here. I mean, a couple of our early deals, we were vastly undercapitalized. We didn't really know what we were doing. We thought that rehab would cost X and it costs 2X, and
Yeah.
it's weird when you run out of rehab budget from your lender and you're like, I need more. The answer isn't usually, yeah, sure, let me see what I can do. They're like, nope, sorry, good luck. And it's kind of
That's
like,
right.
okay, so we have another, several hundred units we need to bring online, and what do you do? So, I mean, it's getting creative. It's putting your own life. It's putting your own resources. It's digging in your own pockets and anybody else that you can to right the ship, all at the same time without freaking out lenders, without freaking out employees, without freaking out investors. The last thing we wanted to do early in our career was, a cash call. Oh, oops, sorry guys, we underestimated all this by several $1 million. What are we going to do? I don't want to get into specifics. I don't want that on recorded tape or anything like that, but it's just rolling up your sleeves and finding solutions at whatever the cost. And it worked. And we did well, and we did well by everybody, and we grew a career out of it. But never was it a cakewalk. Never for 1 second was it a cakewalk.
What kind of solution would there be for in a case like maybe on a smaller deal where you just didn't have enough reserve? Like what sort of solution would you be able to come up with in a case like that?
Ultimately, the reason banks ask for guarantors, people to guarantee the loan, co-sign the loan, is they want people with financial resources to turn to if things go weird. So we didn't necessarily turn to those exact people in these situations, but we had at that point made these connections with people. And we were able to look at equity that existed in the property after a year or two in the deal and say, okay, I have an unofficial sort of quasi second lien on this thing, even though we can't record it. It's good faith. We have relationships here. We don't want to mess anything up. So we can advance funds and be somewhat secured. Don't want to sound too cryptic, but it's that kind of a scenario, if that makes sense.
Yes. I mean, ultimately, it's what you said. I mean, you want to make sure that for people that are listening to take down the deal, make sure they have enough in reserve, make sure they even have too much, because you never know what you're going to run into later. And if you don't, you better get creative very, very quickly.
Oh, yeah. And it goes both ways. Sometimes we got unlucky. But we did a deal called Regal Commons in Arlington, Texas, that you just get lucky. You got your piece on the board and you're going around, and once in a while you land on go and you get paid. And that Regal Commons deal was 444 units. And right when we're about ready to sell it and list the thing, General Motors is across the street, and it's their cash cow plant. That's where they make the Escalade and the Denali and their Tahoe. And they're like, oh, by the way, we're going to drop about $1.3 billion on this plant. Like a month before we list the property. It was like money fell from the sky.
Beautiful.
It's like a luck. So it took a good deal and made it not great, but just extraordinary. So it can go both ways.
But I mean, I would imagine, though, when you first bought it, that plant across the street made a big impact, right? I mean, obviously.
Yeah, it was the driver of the whole submarket, sure.
Beautiful. Awesome. What sort of deals do you have on the horizon that are really exciting you?
So I'm working a lot more in kind of a capacity of angel investor, doing some venture capitalist work with some small businesses, private equity, working with some of this kind of, for lack of a better term, the next gen investors who are coming up, kind of starting their syndication careers. They don't necessarily have quite the same network, some of the same resources available, some of the same depth of investor pool. So kind of working in an advisory role with some of the new guys and gals coming up in the industry, underwriting with them, connecting with lenders, with guarantors, management, materials, like basically everything that we've built without keeping ourselves necessarily in the day-to-day grind as much anyway. Be able to step back a little bit, sort of in an advisory asset management position while still blessing deals for our investors, investing our own money in the deals, guaranteeing the loans, and bringing investor capital to these newer investors. So doing quite a bit more of that. So deal size seemingly is getting smaller. Seems like we're going backwards, but in fact, trying to scale that up to where we have a bigger reach across the country with newer investors and get plugged in pretty well with them. So that's what we're doing on the business front.
Nice. So how would a deal look then? Let's say, for instance, there's a syndicator, they have about 1,000 units and they're looking to take down a bigger deal than what they've done in the past. And they come to you. How would you structure something like that? Or how could you structure something like that? Or would you structure something like that?
Sure. I mean, if the deal makes sense, I'm never going to put my investors or my team into a deal that I don't personally want to invest heavily in. So I'll do my own underwriting, use my own spreadsheets, use my own team to really kick the tires, to look it over. If I'm feeling like, yeah, I want to put money in this deal, then I can sell anything as long as I believe in it. If I don't believe in something, I'm the worst salesman ever. I just
Of course. Yeah.
open up about it. I don't feel good about it. But if I join in with this newer syndicator, or even halfway through their career or whatever, if I like the deal, I'm going to invest in it. Then I'll start to turn on whatever resources I have to it. Lenders they haven't thought about, vendors they haven't thought about. Start to blast out to my email list, to my investor pool, host a meetup or webinar or whatever, explain the deal. Just try to do everything I can. Usually that means me and my partner will be on the deal itself, because that's, if I'm going to guarantee the loan, I need to have some controls. And if I'm bringing investors, I want to make sure I've got their back. So usually I'm a manager in the deal. I'm a sponsor in the deal as well. And this clearly states I'm not the day-to-day operator. I'm more of an advisory capacity, helping the deal get wrapped up and monitoring and watching it closely to make sure things are on path, on trajectory, and we don't deviate from that.
Good. So when you're looking at a deal, then what exactly are you looking for? Like, how do you define a good deal?
I started as a value add investor, and I will always be. To me, if there's not value to be added, it means your margins are going to be wicked thin and make me feel really, really uncomfortable, especially when you're already buying at a quote unquote peak of the market situation like we have right now. Pretty much the only thing you can do is crash the deal. Like, you're not going to bring it up anymore. They've already done everything that they can do to sell it in the best condition that it can be. I'm speaking very generally. Of course, there's always exceptions.
Yes.
But as a general rule, we're at a very, very hot market. Things are very, very tight, and it's still a seller's market in the multifamily scene. So for me, I like to see distress. I like to see it when the place looks bad. I like to see it when units haven't been touched, nothing's been upgraded. I like to see it when a property has been neglected, out of state, out of town owners who haven't been reinvesting back into the deal, who just it's leaving money on the table. And it's what my team is set up to be able to handle, to go in to make an average or a terrible property like new again and beautiful again, and increase the quality of life for them, and therefore add value and increase the rents. And that's how we force appreciation and drive value.
Nice. Good. We try to find those sorts of deals too here in the Midwest. They're few and far in between, but it's just got to keep digging to find them. That's the only thing. So nowadays you're spending a lot of time in the Philippines. So how are you able to juggle everything you got going on and still live in such a great place? How do you do it?
Well, I think last night there was a flurry of text between me and you, me pleading to please push out our podcast interview a little bit so I can get a little more sleep. I didn't sleep till 4 a.m. That's not my usual, but it happens from time to time. I was on conference calls last night, all night, just trying to sort out some last minute hiccups in one of the deals we're working on closing. It won't be anything big, and we can work through those, but some strange hours that certainly does it, to communicate with my team that's on site there in the US. But financially speaking, it's been transitioning a lot. I think you mentioned that I sold my materials company. I sold a lot of my interests in Exponential Property Group to my fantastic partner, Kim Radiker. I've been very clear with my partners that I've recently partnered with about my roles and my responsibilities and the life that I've built for myself, and how I want to preserve that, how I want to maintain sort of that autonomy, that ability to work from anywhere. So basically, I won't involve myself in anything that prevents me at this point from traveling. All I want from living overseas when it's freezing cold there in Ohio and even in Texas, and enjoying some warm weather through the winter or cooler weather in the summer, et cetera. So it's being very selective, being bold with my expectations and positioning cash flows. And I'm just invested everything that I've gotten in things that are generating cash flows for me now. So it really has enabled me finally to enjoy sort of those fruits of the labor and the freedom that comes with it.
Well, and that's exactly it. I think if you do this business right, you can build the business or architect the life that you want the way that you did, and I think that's one thing that can never be underestimated, and you can't really buy that. It's something you have to build. You have to build that.
Yeah, and some people don't ever want to leave it. I'm not that way. I believe in being happy, working on happiness, working on peace, working on living in the moment, not just grinding, not just hustling. I hustle and grind so that I can stop hustling and grind.
Yeah.
It's just my personality. Everybody's different.
But now tell us a little bit about your humanitarian work. Where's that going?
Sure. There's a lot that can be done anywhere on the planet. Anywhere in the world, there's something that you can do to help. My personality, I kind of sat back and tried to identify what can I invest myself and resources and time into that I personally feel will make the biggest impact for me, and who can I help that has the least? Who can I help that has no opportunity? Who can I help that there's just no chance unless somebody like myself were to step forward and offer a hand? And to me, that's children. And to me, that's medical. So, if you're born with medical conditions, it's not like you did something wrong. You weren't lazy. You didn't just, do drugs and alcohol until you just rotted your body out. And then there are kids who just can't do anything on their own. So that was my reasoning. I feel a lot of compassion for the children who are born into a really terrible poverty situation with medical issues. So over here, we do a lot of children's surgical outreaches where we work together with surgeons and medical teams and hospitals to gather together 20 to even 50 kids in a single surgical outreach to deal with miscellaneous ailments that can be treated with a single surgery, usually sometimes 2 or 3, but generally speaking, a surgery where they can come in and 1, 2, 3, a few days, they have their life changed. And that typically costs somewhere between $50 and $200 to do that. So it's very much what I'm focused on here in the Philippines while I'm here. And I do a lot of social media sponsorships where I'm asking anybody if they want to participate. They can donate to these surgical outreaches for $100, for $200, can completely change the life of a kid. And we give videos and feedback and photos and all kinds of things to proof of life on what we're up to over here, and using their every penny and every dollar they've got to the best that we can.
Nice. And it's one thing that I also talk about too, is that if you're able to build wealth in this business, giving back is so important. You have to. To me, it's like a duty. You really need to do that. Giving back is so important.
I agree. And what's awesome is I used to do it solo. I was on my own and I built my own team, and we were door to door, village to village, hunting down these kids. But I learned stuff as a businessman, and you learn how to scale, you learn efficiencies, you learn skill sets that are very, very relevant to any other kind of industry or team anywhere in the world. So I was able to take these skills, find an opportunity with Ruel Foundation. Give a Smile is who I'm working with. I'm on the board of directors now. They have the hearts of gold. They have ground game. They've got relationships, but they didn't necessarily have some of the business practices and systems in place. And so we've been able to leverage off of each other to not just double, but quadruple 10 times our results by implementing the stuff that I've learned in business and in industry and move it over into a humanitarian. It's cool to use those resources, but also the skill sets to roll it forward.
Awesome. Cool. So now, how do you maintain your success now with everything you're doing and your family life as well? Like, how are you doing that?
Well, I peeked at your notes on some of the topics that we were going to cover, and one of them is books. So I won't burn all of that up. But I'm not a hustler, and I think that makes me a little different than a lot of the folks out there. I call it hustle porn. I see a lot of hustle porn on Facebook, where it's just like there's sort of this religion or this obsession with just grinding away. I'm more of the school of thought of Tim Ferriss, his book 4 Hour Work Week. That's very much more my mindset and mentality, and that is put in systems into your life cut out the things that are taking 90% of your time, but only give you 10% of the results. I mean, anyone who thinks along this way really needs to read that book. But for me, I usually work about 4 or 5 hours a day, every day, holidays, Sundays, weekends, it doesn't matter. It's because I enjoy it. It centers me. It gives me energy to just wake up and then work. And then at a certain point, after that 3, 4, 5, 6 hours is done, usually the laptop shuts and my mind shuts off from that. And it's time to move on to the next project, so whether it's humanitarian or going out with the kids, hanging out with my beautiful wife, taking a trip, traveling. It's kind of compartmentalizing that way and just keeping a proper perspective of work hard, work diligently, kind of the tortoise and the hare thing. I'm less of the hare, and it's more like just every day we're going to make progress. I'm going to put in my headphones. I'm going to tune out the world. And those 4 hours I'm working, it's going to demolish. I'm going to move mountains in there, and I'm just going to be in the zone and the flow and just get stuff done. So my 4 hours is probably worth what other people do in an entire week in many instances, just because I'm not commuting and I'm not getting interrupted and there's not meetings and there's not coffee and this chit chat. I'm getting stuff done.
Right. Consistently hitting it every day, every single day. Well, maybe let's go into the bullet round, because I think that also help backfill some of that mindset as well. Because I think it's fascinating when someone can build that type of mindset and execute consistently. That's huge. So if you can give your 20-year-old self a word of advice, what would you tell them?
I would say, dude, network. I was so, at 20 years old, shy, introverted. I wasn't shy. You know what it was, is I was insecure. I just was. Why would I want to go talk to people when I didn't feel great about myself? You know,
right.
Like I hadn't made anything of myself. I hadn't figured much out. And I was sort of prideful, and I just wanted to be like the cool guy in the room, not the novice newbie who didn't know anything. And that really held me back. That held me back for 10 years because I was on the internet, like trying to figure out how to do something instead of going and just talking to someone that does it all day, every day.
Right. You could have got the answer in 5 minutes as opposed to figuring out in a week. Yeah.
Yes. And more than just answer, it's more about linking in, there's values of network, and you add one new node to your network, and that's worth 5 or 10 times what it was just by itself. In this business, you need guarantors. I didn't have any money on my first deal, and yet I was taking down multi-million-dollar deals because I'm networking with people that have money that trusted in me, or they knew of lenders, or they knew of contractors, or they knew how to get deals. You don't get deals on LoopNet and Craigslist and internet forums. You get deals by having lunch with a broker who knows a lender who just heard before lunch that some deal fell out of contract, and they're ready to close and everything's good to go. They just need a team to come in there and replace the former team that just bombed out. That's how you get a deal, not lurking in mom's basement like I was and then trying to feel good about myself on an internet chat or forum somewhere.
Yeah.
So it really would be just network. You cannot do this business without a team, and you just got eat your humble pie, just eat it, and be a young guy like Ronnie Phillip. I don't know if you know him, but goodness, just go out there and crush and network and meet people. And he's going to be, at 22 where I'm at today, just because he's got the right mindset.
Excellent. 3 most influential books and why. I think I already know one.
Yeah, 4-hour work week. For me, that's great. I'm kind of on a philosophy kick these days. When I'm over in the Philippines and I'm not having to grind as much, it gives me a lot more chance to read. So I read a book called Sapiens. I can't even pronounce the name of the author. He's Israeli. Anyway.
It's a great book. Great book.
Mind blown. Like,
yes.
I'm glad that you've read it. Okay.
Yes.
People think they're really cool when they can zoom out. Let's talk about history. Do you know what actually happened in the 40s and 50s? And they feel morally superior to you because they knew it happened 50 years ago. And then you got the people like, well, actually, 100 years ago, the political scene was this, or the moral scene or ethical scene was this. And then someone's like, well, back in, the Roman days and the Greeks, oh yeah, Sapiens just takes it back to about 100,000 years.
Yes.
Let's just see humanity come from nothing in animal kingdom to where we are today. And it just shifted everything. And it makes everything today seem so silly and irrelevant. And it lets you just really focus on things like being happy and doing what brings peace and enjoyment to yourself in life.
Yes. That book blew my mind too. Yeah, absolutely. Awesome.
Third one, I really like Outliers by Malcolm Gladwell. Incredible writer, really approachable, easy book to read, but starts to make you scratch your head a little bit and go, okay, so there's some reasons these people are successful besides just grinding and hard work. There's some patterns that exist out there, and if you can tap into some of those patterns or watch for them, you can be part of that too. I love that book.
Nice. Awesome.
And of course, 4-Hour Work Week. So where do you got that?
Yes. Now, what do you think the next 5 years look like for your business?
I think next 5 years will be a lot more strategic and careful, be a lot more selective with deals and people we work with. When you're starting, you just have to gain that momentum. You need that thrust to break out of Earth's gravity. And thank goodness we have broken out kind of in orbit now. And there's way less forces acting upon you once you've reached that state. So now we can be much more selective about the deals we want to do, the locations we want to deal with, the people we want to deal with, and you can just take it or leave it. I don't necessarily have any need for money now. I can pretty much do anything I want out there in the world. So now it's like, how do I want to spend my most precious resource, which is time? And I want to do that in the business that I love, like real estate, angel investing, VC, private equity. I love it. I love the game of business and finance and real estate, but it's choosing carefully. So I think it'll be a lot of scaling with high quality, top-notch people who are way smarter than me, who are way harder working than me, who have way more drive than me, but don't necessarily have the resources to get these things done that, the past 8, 9, 10 years we've honed and developed. So plugging in with a lot more of those kinds of people to synergize off each other and grow something great.
Excellent. All right, guys. If you want to reach out to Will, you can get him through Facebook or you can email him at will@capexventures.com. I hope you got a lot of good insight on this. This is a great interview. Love getting his perspective. Thanks for your time, Will. I very much appreciate it.
A lot of fun, Agostino. Thank you so much for the invite.
Thank you for listening. We hope you enjoyed the Bulletproof Cash Flow podcast. For more free podcasts, articles, videos, and resources, go to www.bulletproofcashflow.com.